Hey, I'm Mindy Kinnis. This is the Daily Rage. Today was FOMC day. I hope it worked out well for you. Let's take a look at it. I was not trading it myself, but let's see what happened. This was the initial announcement candle. So you can see we did go up one, and we're looking for a one, two, three. In other words, whatever direction one is, the first move right out of the gate, we're looking for it to pull back or retrace for move two. And then move three is a resumption of move one. So in this case, this would have been up one, down two, and then we would have been looking to go long somewhere in here. Now, some people, especially on a little fractal situation like this, I would have done this for sure. I would have said, cool, like this is move three, let's go long. Except that that had zero follow through. If you are more conservative, you might have waited until we actually breached this high point here, which we never did, as you can see, I mean, until much, much later. So that really wouldn't have worked out well for you. Not that you couldn't have gotten any profit in this, but like there was no follow through to speak of. It definitely was kind of a dud in terms of the initial announcement because like down, up, down, up, down. Okay, fine. Then we come to the press conference. That started here at 12:30 my time zone. And oftentimes it will take the same pattern in terms of a one, two, three move on the press conference. But in this case, that first one was a doji. So, okay, like no direction. That's not very helpful. We did push up initially, but then like the most exciting move of the day was probably this right here. And we just went down from there. Then we got a little choppy, got crazy up in here. And eventually, yes, we did push higher. So I guess like maybe the only thing that actually worked out about this was if we don't count this first doji, because that's nothing, there is no decision, right? It's not a direction. If we count this as up one, down two, and then this whole thing as up three, yes, that would have been profitable. But holy cow, would you have had to wade through a ton of this choppy mess. So I'm not upset that I missed this one. I mean, this candle is pretty hot. I'm not gonna lie. I love a good downward push with a lot of momentum. That's one of my favorite ways to trade. But that's cool. The key thing I want to mention here is that even when you're looking for a specific setup, like an FOMC 123, it's still really important to use multi-time frame analysis because check over here on this 60-minute time frame. The way that I set up my charts is the big one on the 2-minute because that's the one I actually trade on. This is a 5-minute, this is a 10-minute, this is a 60-minute, and this is a daily. So I'm always keeping track on the pulse of like the overall market, big picture, as opposed to just this little 2-minute, day trading chaos. But look at this. This is what I would have paid attention to. So we're cruising up, up, up like this whole time. We kind of leveled out before all this got going today. And then this 60-minute candle is very interesting to me because look, we didn't come down all the way to the 60-minute cloud, but we're not that far off. Okay, is it going to breach that cloud or is that cloud going to act as support? And from that point, we were able to push higher. So always keep in mind, like, not just in our crazy little day trading zone of like 1 or 2 minute timeframes, but looking at the big picture always to keep that in your mind of what's happening overall in the markets, not right this second. That certainly has helped me a ton not fall for every little back and forth move in a smaller time frame. This coming Friday, Vicky and I are going to be doing another webinar. We had a great time last night, so thanks to all of you who were on live with us. There's a registration link down below, and I'd love to see you there. I'm Mindy Kinnis. Thanks so much for watching.